Welcome, hey everybody! Happy Friday and happy birthday, everybody! Apparently, we're doing this today, so happy birthday to all! Thanks for joining me here. So we are going to be talking about market profiles, some more advanced techniques regarding the market profile. So we started last week, but it was just too much for one. So we're going to wrap that topic up there, and then we're going to hop into some chart overview, some things I'm looking at this week to set myself up for success next week, and we can also look at any charts that you guys are looking at. So that is the plan. Welcome everybody. Good to see some familiar faces and some new faces in here. Welcome everybody. Okay, yeah. So we're gonna hop right on into it. Okay. So today, like I said, we're going to be going over the market profile in a little bit more detail than last time. So we stopped right about where we were getting into the examples of the trade setups in specific. So that'll be a good place to get back into. But first, I just want to kind of catch anybody up in case they forget exactly where we left off, or if you're not familiar with what a market profile is in general. So we will be brushing up on all of that. And then here's what we're going to kind of add to the mix. There are a few types of opening trades, kind of setups that we're going to talk about, like I mentioned, and there's specific strategies that go along with those. Again, just in line with making everything as systemic as possible, and just learning how to frame the trade and taking the emotions out of it. So after we talk about that, we're going to go through what a typical kind of day will look like for if you like to do this kind of trading, and what the workflow is like, in the morning before the market opens, during the market opens, as you take your trade, as you manage it, and then after. So that'll be really good kind of proof of concept for this kind of thing. We're going to get into some more examples because there's new examples every single day. We can get into some really fresh ones and talk about what we learned, and then we're gonna, like I said, hop into a Q&A session and all that good stuff. So these are some of the more advanced techniques that we're going to talk about. Like I said, the pattern recognitions, where that's where we left off. So talking about ledges, about excess structures and poor structures, and how we can play each of those scenarios. We're also just going to just touch up on the volume analysis and how we can recognize these institutional footprints, because that's what we're all looking to trade with. We need to see what the big money is doing and recognize it early, and then we can follow their lead and catch the easy moves. So this is kind of what we went over last time. We talked about those institutional footprints, those activity recognition patterns. We went over how it looks like when big buyers hit the tape, and when you can look for those big volume prints at key levels, and how that can often indicate a price reversal. We also talked about more advanced volume distribution analysis. So just looking at the breakdown of buys versus sells at key levels, like we're talking about, this really helps build our bias on whether the big volume that's coming in at these key levels is going to reject, or whether you could see continuation at any given point there. So we went over volume at price strategies, which is basically talking about the high volume node and the low volume node. So we talked about how out of the price action on a given day, the 70% of the range where most of the shares are traded, where 70% are traded, that's going to be your value area. And the high and low of that area often will provide trade entries. So we talked about how you can look to fade moves above or below these value areas back to the equilibrium or the point of control if it's a mean reversion type day. So lots of setups like that. If any of this sounds good to you and you don't remember it, go ahead and pop in back to the last week's on Trade the Pool's YouTube channel and refresh yourself after this, because I think it was a pretty good one there. So there are different value area dynamics and trading strategies surrounding those as well. But the most basic are just the three volume profile shapes of the D, which is a balanced one, where the most it's kind of like a bell curve. the most shares are traded right at the middle, and then it's going to be less and less on either side in a nice rounded curve. So that indicates a balanced market, a balanced structure. You also have an imbalance to the buy side, which looks like a P, where most of the shares of the day are traded up at the high a day. That's very bullish. Shows that people, the market wants to find acceptance at this high level and push even higher. And then, of course, vice versa. If it's a B shape, it will be heavy on the bottom and just price will be driving down. Sellers will be in control and it will look to continue down. So these are just some of the basics that we went over. We also talked a little bit about opening types. I don't think we got quite there yet, so we'll talk about that this week. And then, the quote here is that market profile shows where price spent time. It also shows how much volume was traded and when activity occurred. So it really tells you so much just from one indicator. All right, sorry, just checking up here. Awesome. Sorry, I'm seeing all these comments now. I will get to all these as fast as I can. But going forward here, so ledge patterns. These are going to be the first thing that we talk about here. I think we might have mentioned them just briefly last time, but this is one of my favorite high probability setups, and this is kind of what it looks like. So you're going to have a area of significant volume, and that will look like, see this big node right here, marked by this rectangle, and then you see another one forming here that's even bigger, and you mark it this way, and also some up here. So these areas of significant volume, they represent institutional positions where they hold a lot of inventory at a certain level. And what we can expect is that they are high probability reversal points if we retrace into them. So, for example, this example here shows a really strong flag, breakout, continuation. And then when it flushes out here, it comes right back to this high volume node or this ledge and caught and reversed very, very aggressively there. So these are some areas that you can basically look to mark out on your chart. And when price comes back and revisits them, you can see a lot of good action off of these. If you're a scalper, you can often take a quick move directly off of these and then see if the move will stick or not. But in general, these are just areas where you can look to essentially get involved in a trade that kind of got away from you. Because that's what this is representing, where institutions, they were buying down here and then price ran up, but they still have an order down here saying, hey, if it comes back, we'll still buy more here. We're not going to chase, but down here, good price. So these are some ways you can look at ledges. And then I also want to talk about what poor structure is going to look like, because those institutional ledges that we talked about, you can often get a nice bounce off of those. Poor structure is going to be, it's going to be a little different. This is going to be more like a lack of balance, of a balance developing in the week. And what that means is essentially, there's going to be a buildup of either more buyers than sellers or more sellers than buyers over the course of the week. And eventually it's going to kind of break through. And when this happens, you're going to kind of knife through. After you break through a strong support node, you're going to knife through these low volume areas, and you can get a really good follow through move there. So it's important to be able to recognize them. And this is an example here where we have a nice high volume node across multiple days here. This is where we were flagging and broke out from. And then price revisited it once, tried to catch, and is revisiting it again. So this is essentially showing a imbalance in the markets where the sellers are just winning, because when price goes up like this and forms like the point of control is up here, but there's also a lot of volume down here, and then it just rejects. It's kind of like you built your house on sand or on something that's kind of eroding under you, because this should be support, and we shouldn't revisit it so fast. And the fact that we do and don't see a strong bounce, like this is a sign that basically people were up here, or institutions were up here with a lot of inventory, just unloading that, selling heavily. And when you get that heavy selling up here, it's just going to be really hard to push through. And very often you need to retest this level, and it can be a fake breakout. So this is something to watch for this poor structure. And essentially you're looking for like I said, in this day, it's very telling that the profile here is round at the top, very narrow in the middle, and then round down here. And you would like to see most of the shares trading up here in a nice P shape to show it like an incentive for price to return back up if it drops. But instead, it can just drop all the way down here and it loses all the momentum. And then if it goes any lower, it traps bulls, and them closing is going to drive the market down further. So that's an example of poor structure. And you can also see poor structure on the other side too, and that can cause a squeeze to the upside and squeezing bears out. So it's not all just one side, but that's just one thing to keep an eye on. So excess patterns are another interesting one here, and this is going to look like a spike, and it's going to form basically beyond the value zone. And so when this happens, often it's going to basically be telling us that there's a rejection there, and the market's going to often turn. So in this example, essentially we're looking for high volume moves below or above key levels. So this is a level that came down once, held, came back again, and when it kind of failed an auction lower, it couldn't break any lower. It reversed very sharply and it formed kind of a spike. And that often, it's a sign that basically the auction failed and now we're going to try to test somewhere up. And obviously, this was a very strong move. I think this was probably on some kind of news or pre-market data, but it just came up and sought the liquidity right over here. And that's when the tape kind of got mixed and the market actually started trading sideways and a lot of shares entered the market here. But yeah, so essentially what we're saying is looking for a sweep lower and a reclaim. That's going to be that excess pattern. And often it's very high probability and you can search for a nice target way up above. And it's basically saying that we've done our job down here for the short term, and the path of least resistance is no longer down. Now it's going to be somewhere up. And so I'm really a big fan of these guys here. So I want to talk about some high volume node trading. This is going to look like essentially this. Oh, wait. Can you see this? There's my cursor. Great. So see this high volume area right here on the volume profile on the left. This is something that's good to mark out when you have a zone like this, because you can expect these areas to be kind of tough to work through. But if you can see rounding in the bottom of this area, then often that's a sign that it's going to start to reverse. And when it breaks above this, whenever it is ready, when it's done accumulating down here, then your entry is very protected because you have this nice shelf of volume above you at that point, or what's now above you. And once the trade starts working, it will be your support. But very often this will be the base and it will push way up here to the next big node. And you get a really clean trade for a nice percentage gain. So that's what you should be looking for in terms of like on a bigger chart here, on the intra-week chart or higher time frame there. But intraday, there's also a lot of things you can do with these high volume nodes. So essentially, when you have a high volume node, you're going to be considering it a kind of resistance or support, like a level, And I think of levels not as like one price, but as kind of a zone. And that's because I primarily use these volume profiles. So it's kind of like, it's not like a level is a piece of glass where if it breaks, it's over. It's more like a top of a mattress where it can get pushed down and it's got some give to it, but it still does have like a firmness at some point. So in that, with that in mind, let's see. I'm trying to remember what I did this a week and a half ago now. I'm trying to remember what the example was that I was looking at here. So it looks like we basically did a failed breakdown of this area. And now there's a chance to basically move up to the next volume profile because this was the high volume node yesterday. So price was like basically leading down. That's a B-shaped profile. And we did get the move down, but now we might have seen a trend change because this looks kind of like a bullish P shape to me. Looks like a longer bottom tail, and price action would confirm that, looks like. So in this is a case where you're trading out of and back into a high volume node. And even if you think we might go lower, very often you will get a nice push up to test the next level to the upside and then either confirm a move back to the high of the range or reject there and go lower. So that's just one strategy you can look to do there. Like I noted here, expect a bounce or rejection on the first test. And like I said, you're always looking for confirmation between volume and price. So that's to say that when you're trading into a level like this, you want to see basically, if you want to go through the level, you want to see a big amount of volume to push you through, and you want to see price to move through to match. If you get the price to move through, but there's not a lot of volume, that can, be a sign actually of like impressive strength, and that could be good. But what you really want to look out for is if you get the volume but no price movement, because that can be a big warning sign. Because if you have a lot of volume but no price, that's like a lot of effort with no result. So that shows that there's either a big seller that buyers are just getting absorbed by, or vice versa. If you're on the other side of the trade. So these are the things to check for in these high volume nodes. And now I'd like to talk about the other part of the volume profile. So we talked about the big high volume node, but what about this low volume node? So what do we do for those here? So generally, these are considered areas of non-acceptance, and that's just to say that if price is accepted and traded equally in these high volume nodes, a lot of shares are traded back and forth. There's a price acceptance for the most part. When price moves through these low areas of acceptance, they just slice through, and there's no two sides of that exchange. It's just like an imbalance, and it makes a very direct straight move. So these are setups that we love to look for, ones where we can basically find either a push out in a back test of a high volume node, and then we can target up here this next high volume node and cut through the low volume. Like that's essentially what we're looking to do. So we want to trade directionally up into these ones, and we want to have the high volume nodes behind us as support. So moving on here, talking about volume imbalances and how to trade them. So basically, we're talking about how to identify buying and selling pressure imbalances and what those look like. And essentially what happens is that once we have this high volume node that's starting to form, and we see moves away from it, especially moves that are past the value area low. So let's see. Where is my cursor? I'm trying to show you guys this. There it is. Okay, great. So here's our high volume node. That's our point of control. And when price comes down and then starts to find buyers underneath the value area low, which is this blue line, then we can say, all right, probably sellers have got ahead of themselves. And even if we're going lower, we're going to need to come back up and just confirm some levels that were support as resistance. So we have this very obvious level that was support and is now resistance. So it's a very clean trade to look to, once this rounds and finds some buyers, to trade it back and take some profit at the value area low. And then your big target is this point of control. And then you can also be greedy and say, all right, I'll shoot for the value area high on the other side too. And as you can see, price very often, it does want to go lower eventually, but first it needs to come back and see what's going on up here. So these are some really high probability setups, and some of my favorite, basically fading, mean reverting big moves. So for example, overnight here, it was just puking. And then right at open, it dumps a bunch more and then finds buyers in the first half hour, which is a time that I love to look for reversals. So that is a high probability setup for me to come back here. And once it starts working, you can just put a stop under the low. And if you're wrong, you're wrong. That happens. But for the most part, you can just expect a return to the high of, the where the majority of the shares traded. So in this case, there's confluence with the open level too. So yeah, this one gave you the same look twice in a row in the same day. So like I said, these are very high frequency setups that can just, get some consistent income going when maybe there aren't any amazing breakout setups on your radar. So I wanted to talk a little bit about how to link sessions together and how you kind of can conceptualize one volume profile into the next and like how they will develop into each other. For example, in this bit of price action here, first we spend 1, 2, 3 days basing. And it's a little hard to see, but right here and right here, the volume profile of these 2 days are very nice and bullish with a nice P shape where the most of the volume is traded in the top part, but they are still relatively balanced. So essentially, these are telling us that our price probably wants to go up. We should probably be in buy the dip mode, because if price comes down on a day like today or like this and maybe clears out some stops and then comes back up and reclaims something, well, then it's probably going to want to come back up to the where the most volume was traded over here, and it gives a nice chance for a engulfing candle and a push higher. So because of the price action on these 2 days, we can kind of infer that we're looking for a green day tomorrow. And also on this day, we're looking to buy any dips. So you might be able to catch that dip, or at the very least, you're looking bullish the next day. And right out of the gate, since you're trending bullish, you can get a nice move very quickly. And then there's always going to be mean reversion, so that's where you can do these, even in a bigger uptrend, you can still take a short there. That's pretty high probability. So maybe right out of the gate, you're biased long, but then you're also saying, okay, in the first 10, 20 minutes, half an hour, I wouldn't be surprised if the market's going to turn a little bit. So it would just be a scalp long and looking for mean reversion for the main trade of the day. So this is how you can kind of take these volume profiles and based on them and what they're doing, kind of frame tomorrow's trades. So that is something that we can talk about in more detail when I pull up charts in a sec, because we can talk about what I did this week, trading every morning. And we're going to just power through here because I'm kind of forgetting what I was talking about on some of these slides now that it was 2 weeks ago. So what's really important here is aligning your time frames. So I wanted to go over that real quick. So basically, each time frame is going to represent a different kind of participant in the market, whether they're really long-term investors that are just buying and holding for the most part, or whether they're short-term day traders. And you can kind of personify each of them or capture what each of these kind of participants is doing based on these different time frames. So when you're looking at a monthly chart and you're seeing a big bottom wick on a monthly chart, the process of it forming that bottom wick, going down for 2 weeks and up for 2 weeks, that might be torturous if you're a day trader, or if you full ported the stock. But on a monthly chart for these long-term investors, it was just forming a bottom wick in a candle that's pushing much higher. So it's just important to remember that the best trade setups are going to be aligned in time frame on all levels. So it's going to be bullish on the monthly. It's going to be trending up there. That chart's going to look bullish, as well as the weekly, daily, all the way down to where, ideally what we're doing is we're taking trades when the very short time frames are starting to break bullish, and the longer term time frames are already pretty bullish, So that's going to look like flattened EMAs, for example, and starting to curl up, and the moving averages price starting to move above the moving averages, and price using them as support as they curl up. So that's going to represent kind of the ideal swing trade, what that'll look like when all the time frames are lining up. So the monthly represents like the major trend. The weekly is going to be intermediate structure. So it can do a lot of movement on a weekly level within the context of a larger monthly candle. So there can be so many fake outs, so many like weird moves at each of these smaller time frames, but it can still be in the context of a much larger, bigger trend that's almost always bullish with most of the things we're talking about here. So the daily represents short-term opportunities where you can use this time frame to frame, essentially where you think the next direct move is going to be. For example, if we gapped up overnight and then we're starting to show weakness in the first 20 minutes, well, you can bet that it's a good chance that we go down and test or fill or at least test the gap. So because of that, you can a few times a week just basically make free money just by identifying these things and having the confidence to play them. And that's what we're all about here. So intraday is going to be these precise entries. So once we recognize on the daily, for example, that there's a gap up and the market's looking weak, so we go intraday and say, all right, what's the next level up after this gap up? Maybe the price is going to push up a little bit more in the first 20 minutes, and then it'll tag that level where we're going to short with a target of the gap fill. And that's how you can kind of use like an hourly or lower to frame these daily opportunities. So really important to have them all coming together. And what that'll look like is you can align multiple, like a POC or point of control for each time frame. You can align multiple ones of those and get really high probability trades. And so that's something where you can use a tool called variable range volume profile. And basically you can just control the range that you want to do it for, and you can set it for 20 days for a full trading month, 5 days for a trading week. And that kind of gives you these levels where, just like we are contextualizing a monthly chart as long-term investors and an intraday chart as day traders, this is kind of doing the same thing, where we're finding levels where multiple people or multiple types of traders are all interested in the same place, essentially. So that is really all I have to say about this, I think. Yeah, we can just talk about examples here, I think. Essentially, though, based on the monthly, we're going to go into the weekly chart and we're going to look into there and just see if we are biased up or down. If we're biased up on the weekly, then we still expect a little bit of weakness early in the week. For the most part, candles won't just be straight up. They will come back a little bit to test previous support before pushing up for the majority of the candle. So this is called the rule of thirds, where if we're bullish on the week, we're going to expect weakness in the first 2 days and buying opportunities in the first 2 days as the weekly bottom wick is formed. And then that'll happen in the first 2 days. By midweek, we'll start to get the expansion in the direction we're expecting. And then it'll close the week strong near the high of the week. So yeah, Cave Trader, absolutely. I'm going to just hop into charts real soon. I think I just have, I have a few more examples right here to work through, and then we will get into charts, and I will pull that up as well. But I can use this example and explain it as well. So talking about the multiple points of control, it's a little hard to see on this one, so we will use a better example. But the gist is that you can see all of these small ones here. Not very detailed. I know they're small, but you can see all these individual ones. What I want you to try to visualize is like compress all of these together. If you compress all of these together, you will get a volume profile that's going to kind of have a big node. See where there's all of these highs and lows at the same level right here, and then down here. And like that's going to be the value area for it. So what I'm saying is that essentially you can find these high probability reversal points from combining these volume profiles, and we will do that together. So like I said, you can do those for a different time frame, whether it's a month or a week and a day. Those are the most popular and what I tend to use. And besides that, you can also do, quarterly or whatever, any other range as well. Yeah, we can look at the MQ features just a sec. I got a few more slides here. So I want to talk really quickly about institutional activity patterns and basically what absorption looks like. So absorption is going to look like high volume on rallies and selling into strength. So this is basically going to be some level where we have bid up into, and they're just going to be absorbing the bids, and it's just going to have a really hard time pushing higher, and you're going to get that high volume but lack of follow through type action. So for example, we had this gap up here, and pre-market we're running up and it looks strong, but it's fake strong. And out of the gates, we immediately drop back to the point of control. And that kind of tells us that up here, somebody, it drifted up here on low volume, but as soon as volume came back to the market and it actually opened, there was a big seller there. And it preceded this big decline where actually right before that, there was a big top wick. So we could see that when it came back up here, price rejected hard every time it was over this kind of comfort zone here. And so then it needed to come all the way down to retest this level before it returned to the point of control there. And so this is a good example of multiple points of control stacking up, because you have the point of control for this day here, then the point of control right here for this day. And then when it comes down and reclaims that multi-day point of control, then you get a nice push, you get a nice follow through here. And now this is an example of progression from one volume profile to another, because on this day, despite this weak flush out, at the end of the day, it's a big P shape. So you can expect that'll be formed right around this candle, and you can expect follow through up, and your target would be for the pre-market high right here. And then you get nice expansion through there. So failed breakdowns are really the only setup that you need. Let's see, Isaiah. So what is this exact indicator for the volume on the left? This is called the volume profile. This one's called the session range volume profile. And so if you go into TradingView, you can look this up. And it's basically saying at each level, this is how much volume was traded, buyers versus sellers, you know? So it gives you a really clean picture of the price action throughout the day. Whoops. Okay. That is the end of these slides here. So this presentation got moved around a bit. So yeah, these were my examples I have. Now I'd love to go into some charts, and like a Cave Trader had a question here that we can use as an example. I love using your questions as springboards to kind of elaborate on these concepts. So let me get right into there. And this time frame, this one that I'm showing here is 65 minutes. And I'll explain why in just a sec as well. But first, let me hop into the charts. So start thinking about what you like to go over, whether it's different charts or different concepts, and we can do all that. Bear with me 1 second. So you should see if I do this, there we go, perfect. All right. Charts up. Let me find your comments. There we go. Great. So we are going to go over NQ first. Talk about multiple volume profiles, stacking them on top. See some requests for QS and FLNC. You can definitely look at those. And we'll go from there. Anybody else's TradingView do this sometimes, where it will not let you click futures? There we go. Let's go to an hourly. And this is perfect. So a few things we can talk about here. We have the individual volume profiles. So this is for each day's price action. Big P here led to expansion up. This one, big B, led to distribution down. This one, nice and even, was an indecision day. This day we try to push down, failed auction. Not too many shares traded down here, back up here. That's where it wanted to live. So this is kind of how they progress, right? You get the expansion up here. Where do you target once it fails this auction? Right there, I took some off, right there, and then right there. And then I don't know what it's going to do. But that's the immediate draw, the liquidity draw. So you see we're kind of playing it from one to the other, and each of these volume profiles helps kind of uh, inform our bias going into the next one. So what I'm looking at when I'm seeing this here is I'm seeing something that's pretty similar to right here. We'll see this right here looks very similar to this expansion. So we get expansion up to the top here, and both of these zones do align. So there we have the here's where we're getting into the multiple time frames. Because now if you look over on the left here, this whole thing, this is the volume profile for all of these combined. So this high node, this high node, this high node, see how it's represented in this high node here? So what we saw is we pushed up here. This is where the sellers were. Now back here, we overshot it. We did back test it as buyers. That held, but now we lost that level. We lost this level. So until we reclaim this level, we can't really be bullish. Short term, just short term. But most importantly is that we knew this level was important. And so, for example, on this day, Thursday, oh wow, it's only yesterday, long week. When we failed pre-market and my oscillator here was flipping bearish pre-market, I was saying, all right, let's short back to open. So that was my trade of the day. Boom. And then I longed because it was off the hourly trigger. It was off this previous high. And my target was this high volume node up here. See how like you get really easy trades from this? And it's not like rocket science, you know, it's like pretty obvious. It's like, okay, we're weak up here. You know, we're always looking at this like inventory, remember? So these guys are running a shop and somebody came through the back and said, "Hey, I got all this inventory super cheap. Take it off my hands for pennies on the dollar." And they said, "Okay, we'll take it off your hands at pennies on the dollar." And then for whatever reason, oh man, it's popping. Everybody wants whatever this is. And they're selling some here, but then they keep buying it and buying and buying it. And they're lining up outside your store overnight here. And they're saying, "Hey, I'll buy it for this much. I'll buy it for this much. I'll buy it for this much." And you wake up and you're saying, "Wow, you guys want it this bad? Fine, have it." And then you're buying it again right here. So remember, we're always thinking about inventory and inventory management. So that's how you frame these really easy trades. That's why I shorted the open literally when it came up and then came back to the open and lost the open. Just short it right to the opening price. And then I literally said, show me any buyers here and I'll just take along with the winnings. And I bet you I can make that money double again going up. And yeah, you just get the float up back to like this was like 3 candles right here, where it's a pretty defined level. So I was like, that's a good place, somewhere around there. When it started showing weakness up there, you're up plenty. Just take the money, easy money. So today was less easy. I thought we would dip and push. But what I did know is that it was going to be a short at some point. So caught a little bit of it. I did not catch nearly as much as I would like. And I did not protect myself as nearly as well as I'd like because I was trying to play a bounce. I actually made most of my money longing back up here. And then this happened. So my runners died pretty horribly. But what we can say now is that we're starting to get this is like a 2 point of control volume profile, very similar to this right here. And this is not a good sign. So now we're coming back into this, just like we came into this neckline and we popped a little bit and then puked. I think that could be what we see. Something like this on Monday, a little pop and then a push down. And we might need to retest something below. Maybe something like that. Are we in a channel? Yeah, we're in a channel. So maybe path of least resistance might be rip it all the way and clean this out first. Hit the top of the channel, clear out stops here. Then you have a big point of control down here. So if we stack all of these point of controls, oops, it'll be a zone like this. So those are some things some ways you can frame it, things you can watch, look for. And I know this seems like cherry picking, so we can back test. We can go through some random days as well. But let me check in on the comments here. Let's see. Build. The left is visual or periodic. The left this volume profile is the visible range. Visible range. So when I go like this, it'll change. You can also do the periodic, and that's how you can select like this is the past 20 trading sessions. This is the past, set 5 days for a week. So both are totally valid. This is just easy, and it's it works good enough for me. It's close enough for government work there. All right. Let's see. Do I keep a playbook of my best setups? Any advice? Honestly, for me, the best advice that I got and that I can give is to just trade less setups. So I'm really honing it down to like, okay, is there a overnight inventory imbalance that's really obvious to me? Like those gap ups where it's like, okay, it just makes sense that we'd come back down. So if I see weakness up way up here, I'm just going to short it back to the obvious place. So there's those, but besides that, I'm mostly only trading fake breakdowns. I put a focus list together of things that I think look strong or setting up. And there's only a few setups I really take, but most of them look like fake breakdowns, or they are really, really strong movers that are building up like the right side of a wall. And I just put them in a watch list and say, it's like how I don't FOMO chase them. I say, I'm not forgetting about them. They're cooking right now and they're setting up. So once they actually tighten up and flag out at some point, it could be 100% higher. I don't care. They're super strong. I would love it if it's 100% higher. That means that it's a super strong name. So when it finally does set up, I'll take that setup. So that helps me not FOMO into things. And sure, maybe it would be better to just FOMO into them. Maybe I'd make more money, but that's not systemic. So that's like I play those when they set up, and then I play fake breakdowns on any time frame. So if I'm looking to get involved in one of these high flying names, well, I'll wait for it to fake break down some key level. Usually like at my system's hourly trigger, this green line for reference. So fake breakdown by this. Wait till you actually lose it to get bearish. So I would expect a back test next week, and then I'll probably be long into it and then potentially selling from it. So just trade less setups, I'd say, and focus on the real simple ones or the ones that you have a best hit rate with. For me, it's really simple. Fake breakdown. Price went down, passed a key level, came back and reclaimed it, reclaimed short-term moving averages here, easy long, stuff like that. We can go to any day and we'll do the same fake breakdown. Here's one, fake breakdown and then reclaim the green there. Could play this one. Could play this one overnight. Could play this one overnight. If I'm bullish tech this whole way. But each day it's like, it can't keep going higher. How can I keep buying it? Well, here's how I keep buying it. Every time it reclaims, I'll buy some here. Next time it reclaims, I buy some higher. Reclaims, buy some higher. So I'm averaging up, It just keeps working. So that's how you get involved in a name that's like really trending. And that's kind of like my playbook. Very few plays. Nice and simple. And then intraday, basically, if I think the stock is in trend, then I'm just buying dips under the hourly, and I'm trimming whenever it's like just running too hot, just any major level above. I'll take some off and then buy it back when it, add that back when it confirms off the hourly trigger like that. So trading around a core position. And then for intraday stuff, if I'm expecting consolidation, or like we just had a big expansion day, like okay, big expansion day overnight, I would expect a range day today. So I will short over the value area high over this blue, and I will long under the value area low, right end of the day there, and then I get that nice move overnight. So yeah, less plays, more money. Yeah, exactly, Adrian. So he's saying what I've seen is those shelves act like magnets. The price seems to always get there and then make jumps from shelf to shelf on push or drop. Absolutely. Yeah, so that's the high volume. It's all those orders on the books. Market makers love to take price there. Institutions love to, get, moves from one high volume node to another there because they know there's liquidity. They need somebody who's, you know, going to take the other side of the trade essentially when they have these big orders and that big liquidity that can fill those orders. So essentially, we are looking for like the trade is to away from the shelf up to the shelf, and then we see what happens at the shelf. And then we can say maybe it'll break down and fake break down and then come back up and reclaim the shelf, and that's a long. But it could also reject the shelf. So we have to kind of wait and see. But what we do know is the immediate draw is like for the magnet, it needs to come home. It needs to go test it. And this is the same for like a gap fill or something too, because what a gap fill represents is usually there was a high volume level that it gapped down through, and then it created a low volume area. And the price would love to push up through the low volume area easily to tag that high volume area and kind of confirm. So kind of the playbook there. Let's see. Yeah, extraordinary cave trader. So does what you demonstrated work for the 1 hour? And that's the setups I was teaching on the 1 hour. So these work on all time frames, but this one, when I'm talking about the hourly trigger, for example, yeah, that is primarily on the hourly chart. I'm looking for an hourly close, like a reclaim of this trigger. It can close underneath, that's fine. And then I'll just wait until it closes above it right there, and that's the buy signal. Pull up a random day. So that's scary. That's scary, but there's buyers here. There's buyers here into this previous level. So I'm looking for it. Then it reclaims, and I'd be watching it and I'd buy it on like a 5 minute close over this trigger. But if you just wait for the hourly signal up here, you only draw down a tiny bit, then you get the nice move. So it works on all time frames. If I go to a 5 minute chart, then I'll look at today's or whatever yesterday's price action. If you're just a bull, you're just saying, well, nope, 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 nope. I will watch for buyers here. Look at those buyers here. So you could have caught, if you're really quick, you could have recognized that this was an area at play and gotten involved somewhere maybe around here when it showed a strong catch there. And then you could have taken a nice little scalp back to VWAP. You can also say, okay, well, when it comes back down here, I know that this was an area of interest before. It's my hourly trigger, but also I know because of price action, how it just bounced up off of there. I know this is an area of interest because that's where price topped out twice now. That's the previous all-time highs. And if we reclaim the hourly trigger here after sweeping these stops too, that just increases the likelihood that we're going up. So all of these things are how I would use the same indicator on an intraday chart as well and do the same thing. So I think I was buying, I wanted to chase right here, but I waited to make sure that the next push down wouldn't make a new low. And this closed here. And this stick, I was very close. And I believe this stick is when I bought. And then you just get the immediate expansion. And yeah, pretty straightforward. That once it confirmed that there was liquidity that it was looking for down here, the next step is to path of least resistance back on up to sweep up here. And it did that pre-market and then rejected. So yeah, simple trades. And then see, now the hourly is acting as resistance here. You could buy this and you would get stopped out. So it doesn't always work, but when it doesn't work, you know that a trend is starting to change. So until this reclaims, we got to be bearish intraday. On high time frames, very bullish, just waiting for the, for sellers from all-time high to shake out a little bit. And we're watching the 9-day there. Bill R asking, is TradingView CVD inaccurate? I have no reason to believe it's inaccurate. I mean, it's just a matter of whether you trust their data source. It's not like their data. I think they use pretty standard data suppliers. Let's see. Buyers buying for sellers to sell, for then sellers to sell. The previous buys go up and down. Yeah, up and down and up and down. Yep, pretty much, dude. It's a big carousel. It's a game of hot potato. It's all about buying a piece of paper for cheaper, then you're going to sell it to the next guy. So we are creating a lot of value for society doing this. No, but it's fascinating watching it from a mechanical perspective. Yeah, Cigna, Humana, UNH, Easy Day, absolutely. CNC, another one. But yeah, any of these, they're just reaching up. And look, Trigger System loves it. Wow, CI, massive day there. Smashing through both major triggers representing weekly and monthly buyers. So if it can hold above this, then it's bullish long term. See how it can reject, but once it clears both, it'll probably back test and keep pushing higher and higher. So this is like, healthcare is like bullish. Look at that. Look at that breakout. And for anybody who says technicals don't work, I did not remember to place this trade, but my friend did. Shout out Promo for catching this. Literally bottom taking it because he had an order for the gap fill. So how about being up 9%, 8% in healthcare in a week? A healthcare ETF. That's crazy. So yeah, healthcare is all looking amazing. Let me please. I'm the Bernie meme. I'm once again asking you to check out OSCR because this stock is the cleanest cup and handle. 1, 2, 3, 4 knock. Exotic Seal, if you're in the chat, I know you love these 4 knock setups. Testing a level 4 times. I think it's probably better to actually draw this like this to represent where the resistance is. We're trading up into it, but look a lot stronger than the last couple times. Made a bunch of higher lows here. Nice curling action on moving averages. I was pounding the table on this one yesterday because it tried to break out and then tried to break down. And it couldn't break down, couldn't quite break out, but it was in a 4-day consolidation. Every single day it was catching its moving average. So, easy trade so far. This thing's going to cook. I do believe this is finally time. Because I played this move too. Was it that one? No, it was this one. I played this one. And all I knew at this point was that it needed to fill this gap. So that's where I took most of the trade off and then stopped out a little bit, break even. But now it came down here. All it needed to do was confirm this breakout. Then it's consolidating, holding all the moving averages. So path of least resistance is up to clear this high. Maybe this high, but it's so strong already. Probably this high. Then the thing is, so this is the next target. But once it gets here, people have to, or shorts have to buy to close. So it's very likely that it pops more. And then you have this set of stops right above here. They have to buy to close. Then you have this set of stops right here. They have to buy to close. So that's where you can get an explosive breakout where this thing can fly to $30 in a month. I'm telling you. So healthcare, hot. I really like OSCR in the space, but literally grab any of it. It's looking real good. Yeah, Palantir dip. How about that? That's interesting. Let's talk about it. Is it time to wipe the chart? It's getting pretty messy. This is when I traded a lot. I got some decent stuff on there. Let's do this. So, man, here I was saying, is this the juiciest double top ever? And then yesterday I was looking at the chart saying, man, this thing could squeeze. I should buy calls for 189 or 190. So I guess sellers showed their hand. I can't really be too hasty to buy this, but it looks good. Daily trigger back test. It closed under the 21. That's not great, but looks like it mostly just back tested. Whoops, we need those. There's the wick. Yeah, so I just back tested this pivot. Seems fine. Seems like a good place to trap shorts and wick it back up to, oh wow, it's already ripping after hours. Yeah, so that makes sense. It's going to come back up and retest like 180. I'd say that's a nice mean reversion, $5 trade. Yeah, look at that 4-hour stick. And look, see this trigger system. If you guys want to learn this trigger system, come find me. You know where to find me. Pretty clean right off this. I like this. So now what I would say is that I would put a fib on the range, just because now we probably have a bottom, short term at least, and we have a top. So 179 right next to the point of control here, right next to the, major point of control, stacked point of controls here, tagged oversold on the 4-hour Bollinger Bands. It tagged the daily trigger. It tagged the previous pivot. So that's a pretty clean long here. And then we see what it does. That's how I feel about that. It's like, man, daily, it looks ugly. Weekly, that doesn't look that bad. Monthly, it looks totally fine.
Steve, can you please check the note in Telegram regarding share? Thanks.
Okay. One sec, guys.
One thing that can help is if we pop out that window.
All right, I now have this.
And then just, you can have it.
All right, sorry guys, I'm just catching up on a chat real quick. I'm still on the slide in Discord. Apologies. Let me fix that. I gotta automate this somehow.
I mean, that's what the space does. So, cool. Awesome. Oops. Now you're drawing.
One sec. Okay, Discord guys, you should have view of my charts again. There we go. Sorry about that, guys. So, where were we? IWM looking amazing. And this is one of the indices that I want to buy calls on all of them, but look at this. What's this? I know what this is. A very clean cup and handle. Well, pretty clean. Technically wicked down too much, but whatever, close enough. So, very bullish. Probably going to go for a measured move as well. So we take the high of the cup, we take the low of the cup. 1.27, that's where it will make its decision. It might run that and reject. But if it's real, it goes to the 1.68, which is right about 300. If it's going to get to 295, it'll get to 300. So IWM to 300. That's the target here. And I do think we get that. DDT saying he's with Wolf with me. I'm actually not in Wolf at this very moment, but I am. It's on my list. I'm waiting for it. It keeps grinding up. And on the weekly, it's a great weekly close. On the daily, it was messing with me, posting top wicks every single day. I didn't know what to make of it. So I'm not in it right now, but I do think it's good. I think it's a megaphone that eventually will go up. And it's so funny, it's like vaguely doing what I wrote it would, but it's like it doesn't feel like it's cooperating for me. It's very weird. So I do have like a small shares position because I started some. I believe maybe I just bought it open, or maybe it was here, and I forget, somewhere in this like 940. I didn't touch those shares, but most of the position I took was uh, somewhere in here at like 1030, 1033, and so I think I stopped out somewhere on some of it for break even. So yeah, I'm keeping an eye on this one. I'm also watching Marathon here, but it's the same thing where it's just posting top wicks, and I don't know how to feel about it. But when it can break through this level, it can really run. What I do like for data center plays, the fiber optic names, these look really good to me. So there's two. I'm in one. I'm in this one. These guys basically do fiber optic cables for data centers. And excuse the messy chart, but basically here's the thesis. You have a big volatility contraction pattern, which is essentially this move is bigger than this move, which is bigger than this move, which is bigger than this move. Excuse me. And this is tightening up, and it's holding all the key moving averages. If we go to a daily chart, it's holding the daily trigger. It's now back tested this blue 9 EMA and this yellow 21 EMA. So I filled right at 27 today. And that is because I had an order at this major range 50 fib there at 27.04. And it aligned with a back test of this impulse move, this gap up, or this big strong move up. So it wicks back into the fair value gap that I've marked here. Tests this, it tests the 50, and it also tests that 21 EMA. So that's why I got in right there on a monthly 30 strike call, because I think it's going to go back up here to this high volume node. So a little 3.5% move already, up 35%. It gives me the breathing room to actually have this one go, and lets me lean with it, lean with it, rock with it while it bops around here. It could chop around a bit, but I have a nice little cushion for the big move that I think is going to happen, because I keep selling things too early. And so for my swings, I'm focusing on getting really, really tight entries so that I'm good to go. If it works, it works. If it doesn't, I don't lose much, because then the risk reward's really worth it. So AAOI, I really like this one. The daily is kind of chaos. The weekly is also a little bit chaotic, but I think it's bullish here. I think that this is starting to tighten up. These tight wicks are just indicative of the fact that it is 23% shorted, something like that. So when this thing goes, it can really go. I think that what we're seeing is a cup and handle here as well. And we also have a downtrend line that we broke. And on the daily, you can see that we essentially broke out from the downtrend line, undercut it, reclaimed it, kind of back tested it even today. So it seems like we are finding acceptance over this kind of horizontal or diagonal previous resistance and now support. So if we are right, we should get an explosive move pretty darn soon. And the target will be pretty clear. It's the 0.62, which is in alignment with a lot of these top wicks up here. So right in this zone, somewhere between 31 and 32 is where we would expect it to go to. But honestly, I think it has potential to really run up pretty strong here to this 35-ish area. And the longer you pull back, like the more bullish I am long term on this. And so then there's one other one in this space too that I wanted to talk about, and that's LUMN. And this one is probably looking even cleaner. This thing is a monster looking chart. What a monthly. So you go into the weekly, just absolutely beautiful reclaim and flag over a 200 week. This is exactly what you want to see. You have all of your moving averages and triggers based out here, and you are squeezing on up. Beautiful. You also have the big cup and the big handle here. Oh, this messed up my logarithmic chart. So this one has the potential to double at least. You also have like a very defined downtrend line here. So you could trim it $8 into that. But this thing, I think it's going back to 10, and probably a lot higher eventually. So this is another fiber optic data center play. I think they both look great. And I'll just zoom in on the daily here just to show just how strong this is and how when you get a fake breakdown, see, fake breakdown, reclaim, back test all of your key moving averages. You could get in there. You could have gotten there. Could have gotten in on the close right here. Could have gotten in here on the close above. Excuse me. So many opportunities. There's a great buy off the daily trigger. So the point being that when you catch something that is aligned on multiple time frames like this, bullish on all these time frames, say you just wait for this close over this major level and it comes back on you and you buy at the worst possible time. You just let it do its thing and trust that it won't lose this, and you're up 40% already, and it's still just getting started and building strength. See, on the daily oscillator here, it's just starting to move to break out and curl up in the past couple days. So this one's amazing. Love this stock. And what else we got? So you guys talking FCX, I suppose? Looks like FCX. Oh, it's coming back. So yeah, it was just way overstretched, way oversold, and it swept the value area low, or tagged it, and found buyers, immediate buyers, all the way back to the 200 day. Yeah, that would have been a good trade. Strong. All right, Hims got taken to the woodshed today, and I am wondering when it's time to buy. Scary chart on daily time frame, but on the weekly, maybe it comes back to 50, and then we buy it, and it does the big move. Eventually, this thing will move a lot higher. I'm almost positive this is an ascending triangle that's being built out. Yep, still love this name. What else we got, guys? Telling me to buy copper. SCCO. That's the highest one, quality one I know. Man, look at that. I missed this one though. It is just breaking out. So this is the one where I'll add it to my watch list, and hopefully it flags out for a couple weeks and catches up, or gives moving averages a chance to catch up. Because it's very strong, but look, it's like if I bought on this day, it would have worked out, but I'd like it to flag 2 days or 2 weeks. So I'm not sitting here red, green for 2 weeks thinking, did I buy the top of a parabolic move? I'll wait for it to start posting buyers. Then I'd rather buy it on the breakout through there. or just try to catch it somewhere in there. So, yeah, hell of a name. Hell of a move. Okay, JV asking, oh, you're very welcome, by the way, but what's your take on PLD and VNQ? They may pump as rates cut by next year. I don't know either of these, so let me look into them real quick. Prologis. Very tightly coiled chart. This thing is a powder keg. It could move very big. Let's see. Got a clean downtrend line. This is a big base. Very pretty. So depending on how you draw this line, it's basically testing a breakout. It's a really nice look. How it curls up like that. It's what you like to see. This is really good action right there. In terms of, you're talking about they may pump because of rate cuts. Yeah, absolutely. I mean, anything that is debt sensitive or rate sensitive. So all of these, I'm assuming this is. Let me look up on my other screen real quick what these guys are. PLD and the other one was VNQ. Give me one sec. Okay. They're an industrial real estate company, apparently. Okay, let me think about this. Yes, I think chart looks good, and that would make sense. So yeah, watch this 115 level, 115.50. Closing above it, it looks like it's going to break out to me. I really like this name. Daily momentum's turning up, weekly momentum, and we can also just check high yield corporate bonds too. So they are breaking out. They're continuing higher. They're just coming back just a tiny bit, but still holding the uptrend very nicely. J and K is the other one you can look at. Same thing. These are breakout back tests or so. I think that all of these rate basket names are going to do well, for sure. Here's a good metric. Solar. Solar found a hard bottom here, approaching my target. So yeah, things like solar are doing well. Regional banks probably broke out. Oh, this might be a play next week. Got this almost. Yeah, keeping an eye on that for sure. And VNQ. Oh, this is just real estate index. Yeah. This is out of my wheelhouse. I'm not an expert, but I would imagine absolutely. That makes sense to me. And look at that. It's a big pennant on the monthly. Yeah. Should do well. And the most important thing here is this big old volume shelf. Look at that monster. And this year, we swept under it, but held this major low. So, should go up here. $100, up 10%, something like that. Then it'll need to decide, see what it does. Okay, what else we got? Adrian talking about IREN and CIFR. Yeah, both monsters. I was scared of the top wicks on the weekly, but I shouldn't have been. Maybe now it's the time to short. Probably not, though. But maybe. I'd definitely be taking profit. This one looks much better. REN, just complete algorithmic buying. Crazy. Yeah, I got to find more data center plays. Okay, going back, trying to find any other comments I might have missed. Feel free to give me some more questions here, or otherwise I'm going to wrap up relatively soon. QS. Look at QS. Incredible. Look at that. Beautiful. So it just broke out. Further broke out, I should say. But yeah, beautiful breakout. And give it one of these too. Yeah. Looks like it's going to 20 to me. Probably higher. So for a chart like this, there's a few things we can do to project the move. The first is that this is like a base. See, it comes up here once, twice, 3 times, 4. So this is one big base. We measure from the bottom to the top, right here to right here. And it's about to confirm the breakout's real if it can close over 1680. Then the first target is 2050, roughly 20, 2050, right around there. Second target, roughly 25. Third target, roughly 30. And this aligns with a pivot. This aligns with a pivot. Yeah, so these levels should be good. That's what I would say for QS. Rock and roll. This one looks better than the data center ones. And it's not because those ones look bad. It's just they're just crazy, just out of here. They're just going to keep going until they stop, and I don't know. You know? This one, look, yeah, just broke all-time highs. Insane. So that's where you got to be like, okay, if you're not taking profit here, then when? Coin, here's a good example of why you should always take profit on these charts at all-time highs. So, Adrian, this is the cautionary tale. If those other charts, the data center ones, if they're anything like coin or a lot of charts, most charts, when it does hit that all-time high, there will be massive selling, and it might take a week or so. But there will be sellers will just outpace buyers up here for a while. Now I think coin coming back and way up. And see, I thought it would take longer. I missed this, but it came right back to where I thought it would, 50%. Now we should go higher. Did buy on a firm. Let's take a look at it, Tyler. Okay. Yeah, no problem, Jay. Sorry, I couldn't give actual. Like, I can just look at the charts, but I couldn't tell you about the fundamentals of the housing market in general, based on my macro perspectives of what I do kind of understand. Yeah, that makes complete sense, though. So, is this the name I'm thinking of? Yes, SKBL. This one's cool. This one is a Hong Kong civil industrial engineering firm that I believe is heavily involved in data center build out. This is one I'm watching very closely. See this level here? I traded it to this, and now I'm waiting to see when to get back in. Still looks a little weak, so I'm watching this 21 day. Put an alert actually. 275, but this is one that I'm watching in this space that could do crazy things. EQIX, Equinix, however you say it. How do I feel about this? Bear flag of doom? Probably not. Probably accumulation over the weekly. Does it like to do that? Yeah. I think I like it. Not like crazy about it. Like long term, yeah, it's probably at a good buy spot. Looks slow and boring and too expensive for me. So I ain't buying this. What can I buy? 1/8 of a share? Come on now. Let's see. What else do we got? FLNC. I'm going to cry. I didn't buy. Yeah, you were absolutely dead on right about this one. I should have chased. It's going crazy. Now it's into the week or monthly trigger. Now it's into this previous kind of congestion zone. Probably comes up here to 16 and then makes a decision. Long term, heck, I don't know, man. Up more? I don't know. It's going to get stuck at 16 to 20 for like a while. But wants to go higher. Very, very, very strong. Cool. All right, looking at MU, Tyler. And wait, Tyler, there was another one. We said affirm, and I got distracted. So we'll do MU and then affirm for you. Jeez. Yep. So, I mean, heck. Is it the prophesized uptrend line? Is that what it did? Still got more room for the prophecy. Maybe this prophecy. Yeah, this one fulfilled. This is the big one. So yeah, insane chart. But the big picture is that this is all a base going back 20 years, 25 years. So people think this is way overextended, but really it's just pushing up out of the base and it's just confirming the breakout's real over the 1.2 fib. And really, if we draw the fib like this, that's probably the way we should do it. And so it is about to hit the 2 target, but I think it's going to 250. I don't know that though. If it top tier, that would make complete sense too. But I wouldn't fade this, that's for sure. I can't buy it here either. But watch what it does 190 to 200. That's going to be really important. Right now it's just running so hot. Definitely can't buy it. How about affirm though? Is that a buyable dip? I don't know. I want it down here. I want it at 70. 70 is a really, really big level. Give me 70 and I'll buy. Thought it would do this. Did not. Yeah, give me 70 and I'll buy it if there's any buyers off of there. Extraordinary Cave Trader, yeah, silver and gold, absolutely. I also did. So I do analysis, I do reports, research reports, as well as webinars and all that. So that's with TGI Research, and we just did a big report on silver miners, junior silver miners, a few weeks ago. And if you're interested in the full report, you can come on over to find me on Twitter, and I can hook you up with that. It's part of my newsletter as well. But let's go over what I got as a special for you guys right now. So my favorite, this one, SVM. We talked about it when it was breaking out right here, 550-ish. Up 30% so far. I think there's a ton of room on this. Long-term chart here. I forget what the other ticker is. Where is it? EXK. That's what it is. This was our other pick. EXK. Monthly chart here. These are the silver miners I like, the junior silver miners. Y. This one's up 17%. Pretty good. And we'll look at SLJ too. And this is just the ETF. And as you can see, look at that beautiful, beautiful. Entire price history is just a base, onwards and upwards. So that's a big reason why I liked silver miners, especially junior miners. You can also, I was doing a lot of work with ratio charts. Is that the right one? SILG. That's right. So this ratio chart shows junior miners versus regular silver miners. Showed a clear bottoming off the point of control, might I add, and a lot of room up. We also have other ratio charts that are kind of informing this bias, like IWM to SPY. The monthly chart here, the ratio chart, coming back to all-time lows and starting to base, starting to push off. So that's why I'm expecting small caps to outperform. Obviously, this aligns with the macro thesis of Trump running it hot, the Fed playing ball, being very dovish, great for equities, tough for inflation and the average American, very good for your portfolio, good for his voting block, but good for small caps. So we should see outperformance, significant outperformance, and these ratio charts are really useful for finding this kind of stuff. Other ratio charts I wanted to show you because we were talking silver and gold. Look at this one, silver versus gold. It's a pretty chart. The monthly breakout from all-time high downtrend line, clean double bottom, major volume shelf now being reclaimed. It's a beautiful chart, isn't it? So now we do one more thing. So this is telling us that silver is stronger than gold right now for the first time in a long time. I mean, it has been for 4 months, but it looks like it's going to be for the next year or so. So now look at this. SLV plus GLD divided by SPY. This is what precious metals are doing versus SPY. All right. Remember, we're talking about bases. This whole chart is going to be a base. It's going to break this and go much higher. So this is telling us that precious metals are going to outperform SPY. And let's do it one step further. SLV plus GLD plus SPY. You can buy all of this stuff versus the dollar. See, it's just extending more and more. And the biggest discrepancy will be silver versus the dollar. Whoops, I'm sorry, gold versus the dollar, because gold's the strongest overall at this point. And now silver's starting to overtake it. So all of this is telling us that the dollar is getting devalued. It is telling us that there will be an influx, a continued influx into precious metals for the next 5 to 10 years, I believe. Maybe I'm crazy. Maybe I'm a gold bug, but I was a gold bug 2 years ago when everybody didn't want gold. So whatever. Those are my thoughts on that. UAMY is so good. Yes, I was pricing leaps. People are buying the heck out of calls, even up here. So I will be looking for a buy somewhere over here. Yeah, crazy one. Crazy one. There's another one. I forget what it is. I have to look it up. Is this it? CRML? Yeah, critical metals. It's got it in the name, guys. This is how I found USAR, the intense due diligence of find me a rare earth metals company that has rare earth and US in the name. Like, that was it. That's all you need. So this looks really, really good long term. Look at that. The mother of all fake breakdowns. So keep this one on your list for this basket. It's an interesting one. Mic check. Mic not working. Yes, no? Give me Give me a heads up if you can hear me here. Yeah, platinum and palladium, absolutely. Absolutely. I think there's still lots of room on these too. Platinum, crazy move. Still looks strong. What's palladium? I always forget it. PALL, is that it? Wow, yeah, see, look at that. Can't tell me that trade isn't still good. I guess that is the ticker I'm thinking of. So yeah, palladium looks incredible. I'll make sure I don't forget about it. Um, okay, awesome. Thank you. Alrighty. So I guess keep asking questions if you got them. I'm going to go through my top watch list here, and by the time I'm done, I'm gonna head out. Awesome, thank you, William. I'm very burnt out today, so I appreciate y'all sticking with me. And this is like relaxing for me after a long week, so this is good, but not my best analysis. If there's anything you'd like looked over closer or anything else, definitely reach out. Um, but happy to give anything a quick look over here. Yeah, you're gonna make me cry, Adrian. Lots of coal, lots of good coal. I talked about all these setups, and now we're gonna go look at the lines I haven't looked at since they broke out and I missed them. So HCC. Let's look at my lines and my buy that I didn't take. The double bottom through here. I said I missed it on this day, but if I just sat with it for 3 days, it would have given me a nice bottom wick off the hourly trigger off the bottom of here, and it would have been a perfect entry. And I said it's going to go up to this zone, and then immediate straight shot here would have trimmed there. Then it would have dropped right back to support, and I would have gotten another chance to buy it super cheap. So this is where if you trade a system and you stick with plays and you don't get discouraged saying, "Oh, I missed this day," because I had drawn this before this day, and I'm like, "Oh, I missed it." I didn't miss it. I just need to wait. Now it's on. Now it's going. Now it's go time, and the clock is ticking. So that is how I would look at that. So I don't cry about it. Um, yeah, Adrian, I do tend to agree. Nuclear is the speculative one, but realistically speaking, it will be primarily powered by alternatives. And by alternatives, I mean what we use now. Oil is the biggest one, but everybody knows that. Coal is the one that everybody is like, this is a sleeper. My sleeper is natural gas. I think natural gas is a very, very cool way to play data centers, and I would love to show you guys. This was from the last report I did. It was a comprehensive look at the different factors which are moving the energy market going into this next quarter and next year. And essentially, there are different geopolitical vectors. So there's different stocks that will respond best to different situations that are developing geopolitically, namely rising tensions in the Middle East between Israel, Qatar. The Middle East as a whole is, there are rising tensions. We have things not seeming to be de-escalating between Russia and Ukraine, and Russia making incursions of Estonian airspace. So there's a basket that responds well to that. And also there's rising tension in Venezuela between Venezuela and the United States. Talks of either potential coup or, some kind of military involvement. Anyways, there are some names that respond especially to that. But the biggest driving theme remains data centers, and it's looking for alternative places that are going to be turned to that haven't already tripled or 5x'd, because that's where we are at this point in the cycle. So CRK, these guys are natural gas, and this chart is just beautiful to me. Beautiful VCP, a beautiful cup and handle here. The further you scroll out, the better this looks. So we got involved in this name. Right about there. So we're already up like 10%. Right, it was coiling under the 200 day. This one, I think, is just an amazing deal. I wish I learned about it a couple weeks ago when it just puked out to the weekly or to the monthly support there. Did not. But this is how I want to play this theme, this natural gas data centers theme. CRK, another way, a little bit more safe, is RRC. Talk. For some reason, I feel like you're gonna like this chart. This seems like a talk chart. Big ascending triangle on the monthly. This thing could go much, much higher. I think it's a triple in the next 5 years or so. Just cooking that monthly 200. So these are two names that I'm watching for that. And then here's one that I just think the monthly chart's so beautiful. This is small cap. They are a Venezuelan oil alternative. So they're primarily sourcing from Canada, I believe. I think they're Canadian. Anyways, pretty chart on the monthly. Keeping an eye on this one as it develops. I think it's probably a buy. Just anywhere in here. So yeah, that's what I'm thinking on energy. And then yeah, still love GEV. Yeah, even with the downgrade, who cares about the downgrade? This is a monopoly on a energy source for data centers. This is huge. I'll give you another one. This is auxiliary to the silver trade and the data center trade. So FSLR. These guys are who people are going, or who data centers are going to turn to. Man, I really wish I just bit the bullet and just bought while it was chopping around in here. I'd be up 20% already. Yeah, this was a slam dunk, and I just missed it for some reason, even though I was watching it. Anyways, so FSLR, they make super thin paneled solar. It is ideal for data centers. That's their entire target addressable market is like institutions and industrial use case solar. The biggest thing is that these panels, this technology that only they have, uses so much less silver than all the others. Well, that's very convenient because, Jesus, look at the price of silver. Silver's not slowing down, silver's speeding up. So if you rely on silver as a component and it's doing that, that sucks for you. And if there's a competitor that doesn't need that, that's a big boon. So when you have that factor, you can see that displayed when we look at FSLR versus TAN, which is actually funny that it's not outperforming because it should be. And that's actually a sign that tells us something else, I guess. That is telling us that the name of the game here is rate sensitive shitcos. We're buying those. So TAN is full of those. So now I was trading Sunrun. Is that outperforming? Yeah. Sunrun is outperforming FSLR. That's another wild one. So all these ratio charts are great because they help us figure out why the market is moving, how it's moving. Oh, you guys talking about BTU? Let's see. It's a sell. What's a sell, Tony? What are we selling? Rodney mentioning CGC. Is that Canopy? Are we doing weed stocks? I like them. All right, my question is why buy a Canopy when I could buy Tilray? I don't want this because it's full of things like Canopy. Actually, I don't know why I'm shitting on Canopy. Maybe they're better now, but Tilray seems better. And if it can break this base, then it rips. One thing that's really important about the weed trade, if you guys are trading the weed, you guys don't, it's okay. You can trade the weed, but don't invest in the weed. You know, this is a trade. These suck. These companies suck. These companies all suck. And the second that it's decriminalized, it will be sell the news. So it will pump into the announcement. It will massively pump on the announcement, and then it will fucking die. And it will suck for another couple years. I'm almost positive. Not 100%, but I'm almost positive. So please be careful. So many people are married to this narrative. And I feel like there's a destiny, like so many of them are destined to be bag holders after this triples, and they keep buying it all the way up, and then they hold till it goes to zero or next to zero. Let's see. Adrian, absolutely. Yes, they suck. Yes, weed as in cannabis. Yes, they suck, but at some point the announcement will come and it'll be explode for fast profit. And the charts don't suck. Not right now, they don't. I mean, they've sucked for a long, long, long time, and now they're starting to not suck. So congrats. It's like that meme, you know, it's like falls all the way down, one green candle to everybody taking victory laps. Congrats, Bulls. Okay, BTU making me cry with these ones that I missed. And now look, it's a all-time high breakout. This is insane. The mega double bottom, the whole thing is a base. This thing's going much higher, and I'm sad because I was talking about it when it was basing here, and I didn't buy it. I should have said this was the day I was like, I missed it. It was it was accumulating. But if I had sat with it for a week and watched it flag out, I would have seen it getting really tight into the rising daily 9 EMA. And that would have been a nice day to buy on really low volume, either one of these 3 days. So always stick with these plays. When they're running like this, even now, I should be waiting for it to flag out. And hopefully it does, and I'll buy it then. Man, crazy moves. Yeah, DJ, it does. Absolutely, it hurts. But yep. What stocks can you trade for weed? You can trade the index, MSOS. You can trade, if that's not degenerate enough for you, you can trade MSOX, 2x levered. Ideally, you trade the leader, which is Tilray. This one's stronger than the other ones. And I will throw you something else on your radar. Why don't you trade psychedelics? This one's looking much better. For long-term investing, this one's just starting to work. You can DCA into this one to the moon. Psychedelics. This is the index, PSIL, psychedelics ETF. One of the leaders, actually, well, at least the one with most household name recognition is MindMed. Look at this one. This is a pretty chart. It's a clean breakout. That's going to eventually be a $50 stock again. There you go. There's a 5-bagger. Thank me in 5 years. I love these names for long-term, like Roth stuff, degenerate Roth trading. Good stuff. All right, let me show you a few names I'm looking at, and then I'm going to head out of here. First off, Oscar, we talked about it. Just reiterating, this is my top setup right now. Love this one. It's my biggest position. Love this thing. I think it's going to 30. We'll trim at 24. For AI data centers, I'm in AAOI because I got a good fill right off my level. If I were to just buy right now, I would buy Lumen. Looks stronger overall. I would just buy shares and not look at it for a while, and it'll eventually be $10 faster than you think. LAES. This is a quantum name. I thought it was LiDAR for some reason. It's a quantum name. 1, 2, 3, 4 knocking. This key level, it's double bottoming a new base. It's carving out this new base, which is essentially a handle to this cup. We should go much higher. I like leaps. I like shares. I like trimming at 550, 570. Actually, there's a gap up there. I like trimming into the gap over the 50. $675. Love this one. I'm in this one. Drones, very strong. We are on alert for potential breakout. This top wick has me worried. I got to look at the rest of the sector. Joby looking a lot better. Archer somehow looking the best. Look at that. Look at that close. That's beautiful. So Archer should be good to 14. Marcat should be good to 16-ish, 1550, 15. If they do stick the move. Joby should be good for new all-time highs. This one's very nice. Tight little handle here. Broke past all-time highs again. This one could go a lot higher. This one might be ready to take the lead and run again. So I love this sector. Keep an eye on this sector for sure. Got USAR, Puke Sesh, can't look at it. I would love to see it come back to 20. I doubt it does. I will look for it to fill the gap that it just made. Come back to 23. I'll look for it there. SGML. This one's a really nice daily chart, reclaiming a long-term weekly trigger. Tagged the high here, broke this. So any pullback into here should be a buy. And we can target all the way up here at 11 bucks. We can target here first, 9 bucks. Big targets up here, 11, 12. And this one's lithium, so very thematic, very hot. And potentially a 50% retrace. Let's see if I'm right there. Oh, super deep. Never mind. This is a log chart. Never mind. 50 is way up there. Anyways, SGML. So besides that, space. Space is hot. If you missed ASTS, I did too. Lunar, just setting up. Peekaboo. Over the downtrend line. You can call it a cup and handle if you want. You can call it a squeeze candidate if you want. Starting to squeeze. Today it was acting like it was squeezing. The intraday price action. This end of day run felt like shorts were covering, getting out of the way before a big move. So I like Lunar. Even more degenerate, there is Space. Very similar. Big pennants here. On the daily, look at that. Squeezing through the 200, squeezing through all of these moving averages. This thing could rip to 6 to 7, at least 5. A lot of room on these. The leader is Rocket Lab and ASTS. Rocket Lab clear breakout here. 1, 2, 3, 4 knocks on the way through. Very, very healthy here. So this one should be an easy trade up to 62. MBLY. Mobileye. This one's tied to Intel. They have a lot. Intel has a big stake in them. They've been trading in the gutter for a long time. I used to trade this thing up in this range at 40 bucks when it was hot. Chart completely broke, but now I think it's under accumulation again, starting to push out of a base. Wouldn't be surprised if some news came up in the next month or so. So keeping an eye on this one. Almost there, guys. A few more. UPXI. I gotta look up what this one does. I have no idea what this one does, but pretty cool chart, huh? Peekaboo. Nice flattened moving average clusters. You'll love to see that. Nice squeeze of the Keltner channel there. The Bollinger Band's going to be starting to push up. Like that. Good look. Dude, you keep saying it's semiconductor. I just looked it up. I swear. All right, I'll talk to you about this later. D Pro, I missed. We talked about it. Yeah, crazy. I'm sure it keeps going. That's another to put in the list. Yeah, and King, Katos. Yeah, Kratos. I traded that in under 20. Sad face. Tony, I do look at fundamentals for any that I'm actually like investing in. For trades, I just don't care that much, and they just have to tick certain boxes. So the technicals put it on my list. Going through my list here, then I go through the fundamentals before I actually get involved in anything that I'm holding overnight. Is essentially my rule. Fundamentals definitely important. I just believe that the fundamentals are represented in the chart as well through the technicals. You know, if the fundamentals are good, they will show. If they're good, but the price is not ready to move for whatever reason, that will also show. For me, I'm a tourist in any of these sectors. You know, I can learn as much as I like, and it's fascinating to me, but I'm never going to be a professional. What I can compete, what my edge is, you know, in technical analysis. So I crowdsource all of this information by looking at the charts. Yo, Mike P, good to see you, brother. Yeah, Rocket Lab to the moon, absolutely. Yes, sir. Yes, sir. All right, SoFi, yeah. Let's look at SoFi. Just talking about this one, they're trading back into a pivot. I'm going to clear all my drawings here. Keep it nice and simple. Pivot. Let's see if it holds. See if there's anything more meaningful here. So it just cleared all-time high liquidity. Now it's kind of bopping around in this zone between these wicks. I would imagine, I really couldn't blame it if it's running too hot and doesn't hold this 21 week, which it is trying to. There are buyers here. So it either holds here, stick saves and goes higher, or it comes back down to this pivot. That would be totally fine too. We made a giant cup, giant base, a giant mitigation block. So anybody who got caught long up here, or even up here, they're now made whole. They're green again. So that's a lot of sell pressure that we need to kind of digest. And it just needs to tighten out. It could drop all the way to 20. Still be very bullish overall. So give this one time. Probably not an options play. Ambiguous weeklies. I'd like to see it just tighten up in this zone. But realistically, it could definitely dip. Could dip here even. I really doubt it, but that's what I'm seeing on SoFi. All right, guys. I think that just about wraps it up for me. Is there anything else I want to show you? No, not really. BBAI setting up. That one's getting tight. Nice pennant. Continues to flesh out. So the big break is when it breaks through this 850. And then it flies to 1050 and beyond, I would say. So we're watching this volume shelf. Like one more push down, but I don't know if I get it. Sound is very similar. This one's a little bit tighter, a little cleaner. And the laggard is AI. But pushing out of a nice base with a big gap overhead. So it could get a clean move to 22. All right, that is what I'm looking at. That's what's going on this week. I hope you guys had a great trading week and enjoy your weekend. I'm going to get out of here. So let's see. Yeah, all right, cool. Looks like I caught up on questions. Perfect. Yeah, have a great week, guys. Take care. And if you are looking for me, you know where to find me. My Twitter is SteveTeilmann. And I'm also on Discord there. You can find that in my bio. Thanks so much and have a great week, y'all. Take care.